Hello everyone. My name is Anjani Kumar Khetan. I'm based out of Bangalore. And in this video, we will start a new series which deals with what are the new changes which are expected to come in the realm of provisions which are covered from an IFRS perspective under IAS 37, and from an Ind AS perspective, these are covered under Ind AS 37. So what we are going to cover in this particular video is to introduce you to the subject of what changes are on the anvil, what are the targeted improvements which the IASB is intending to bring in the realm of provisions. So with that said, let us see what are the proposed targeted improvements which is being contemplated. So to give background to the issue, what is it being sought to be addressed by the IASB? Let's first look at that with the evaluation of how the business has evolved over the years. Now companies started facing additional challenges, more particularly in terms of accounting for complex transactions, wherein uncertainties are involved. Now, accounting for provision is one such area wherein the stakeholders needed more clarity with respect to various aspects like the one which are displayed on your slide. So basically, these are the key questions which the stakeholders wanted clarity on from the standard setters. So, first and foremost, how an entity determine if present obligation exists in a particular case so that provisioning requirement is triggered. Second, related to that, what is the point in time when an entity need to recognize a provision? Of course, the requirement of the timing of the recognition of provision is contained in the current set of standards, which is IAS 37 from an IFRS perspective and Ind AS 37 from an Ind AS perspective. However, there were practical challenges in terms of determining what is the point in time when an entity really need to recognize provision, and therefore more clarity was sought to be obtained from the standard setters. Also, the related question is, okay, having determined what is the point in time when the provision is to be recorded, the next logical question is quantum. How much? Which of the cost elements that need to be included while measuring the provision? So these two questions were in terms of the existence and the timing of the recognition of provision. This third question is quantum. How much you need to record? What costs need to be included as part of the measurement of the provision? That is another area wherein stakeholders needed more clarity from the standard setters. And the another point wherein the clarity was sought by the stakeholders is which discount rate is to be used in discounting long-term provision. You might already be aware that where there is long-term provision and the time value of money effect of such long-term provision is expected to be material, then the current accounting standard, both Ind AS 37 and IAS 37, requires that the provision need to be discounted to the present value. Now the challenge what came, okay, when there is a requirement to discount such long-term provision, what should be the discount rate at which that the provision need to be discounted? There was a lot of diversity in practice in terms of which discount rate entities used to apply while discounting long-term provision. So these are the key questions wherein the stakeholders needed more clarity. And that is the genesis and the trigger for the proposed amendment. And therefore, to respond to these questions, the response from the standard setters was that in November 2024, the IASB published an exposure draft entitled Provisions Targeted Improvements, which will eventually be a proposed amendment, which will be an amendment to IAS 37. Now, as I mentioned, this proposed amendment is in response to the stakeholders' feedback. Let's say the people who are applying the standard, the preparers of financial statement, about the challenges which they are facing in applying certain aspects of Ind AS 37 and IAS 37. From an IFRS perspective and Ind AS 37 from an Ind AS perspective. And most of the challenges were hovering around these set of questions. And therefore, the proposed amendment to IAS 37 seeks to clarify what are the related requirements in Ind AS 37, which is there, and also the proposed amendment seeks to withdraw IFRS 21. IFRS 21 is a separate piece of standard which deals with levies. Okay, so under the IFRS world, this interpretation by the IFRS 21 after the amendments or the proposed amendments to Ind AS 37 are effective, this particular piece of the standard will go. It will be withdrawn. Rather, the new proposed and amended Ind AS 37 will also incorporate the accounting with respect to such levies as well. Now, of course, from an Ind AS perspective, this corresponding literature is incorporated in Ind AS 37 itself as part of Appendix C. So, Appendix C to Ind AS 37 has the same literature which deals otherwise with the levies in the IFRS perspective. Now, obviously, because India has gone for the convergence path to IFRS, at some point in time, even under the Ind AS 37 also, similar amendments which are there under IAS 37 are likely to be brought in as part of Ind AS reporting framework as well. Now, this is the background to the issue, what caused the proposed amendments and how the standard setters have responded to this. Now, before we move forward, let us quickly recap what is the current requirement under Ind AS 37 and IAS 37. In terms of provisioning, what are the requirement, what conditions are required, when do you really need to record provisions, because these questions have been emanated because of the actual implementation of the existing standard. So before we really move into what the standard or the proposed amendments are seeks to achieve, it is important to have continuity and clarity of what is the current requirement and how the proposed amendments will look at things differently. So let us look at the current requirement. I'm sure most of you would already be aware that paragraph 10 of IAS 37 and also Ind AS 37, it defines provision as liabilities of uncertain timing or uncertain amount. So therefore, basically, not all provisions are liabilities. Provisions are a subset of the liabilities. And also, Para 10 has defined liabilities. So, Para 10 of Ind AS 37, you read it Ind AS 37, not 17. Ind AS 37, so paragraph 10 of Ind AS 37 and IAS 37 defines liability as a present obligation of an entity arising from past event, which is expected to be settled by way of an outflow of resources embodying economic benefits. Now, this is how the liability has been defined. But not all liabilities are provision. Only such liabilities as defined here, only such liabilities which are of uncertain timing or uncertain amount actually falls within the definition of provision. And therefore, under the current standard, provision is also a liability, though it is of uncertain timing or uncertain amount. Not all liabilities are provision. Liabilities is a much larger spectrum. Provision is a part of it, which are meeting these two requirements. Right? And the word uncertain, therefore, in the context of provision, the uncertain word, this is very important. So if, for example, if the timing or the amount is certain or almost certain, then it will not fall within the definition of provision, rather it will be an accrual. So for example, if suppose you have taken some services from a vendor and the invoice is already received, you have not accounted, that technically is accrual because you know the amount, invoice is with you, it is only that you have not accounted. That is accrual, whereas provision is the one which is of uncertain timing or uncertain amount. If the invoice is not received, you are estimating something based on, let's say, your prior experience that could potentially fall within the definition of provision. Of course, we know examples of provision could be, say, warranty provision. Let's say we have sold a car. Now, the moment you have sold the car, the triggering event, the car which have been sold along with the warranty. Now, in that case, the moment you have sold the car, your warranty obligation also starts. Same way, major repairs, which are part and parcel of your sale transaction. Those are some of the examples of provision. Likewise, if you have the long-term liability in terms of protecting the environment. So if you have done, let's say you have a nuclear power plant which you have installed, and you are operating such nuclear power plant, the moment you exit from the nuclear power plant, if you have done any environmental degradation and you have an obligation to make good those losses to the environment, that could another be an example of which requiring provision. Okay, so with this said, this is how provision is currently defined in the current standard IAS 37 and Ind AS 37. Now, when to recognize provision? As per the current version of the standard, there are three conditions to recognize provision. The three conditions are listed on the slide, wherein an entity is required to recognize provision when these three cumulative conditions is an end condition. All the three conditions, when they are actually met collectively, an entity is required to make the provision. So the entity should have a present obligation as a result of past event, and it is probable that the outflow of resources embodying economic benefits will be required to settle that present obligation, and the amount of economic benefit which will be required to settle the obligation can be reliably estimated. So these three are the cumulative conditions. A point in time when all these three conditions are met, an entity under the current requirement of IAS 37 and Ind AS 37 is required to recognize provision. And when we say here probable, I'm sure you would be aware, probable basically here means more likely than not. That is more than 50% probability threshold. Now let's quickly look at a flowchart in the next slide, which will talk about in what circumstances provisions are required, or a contingent liability needs to be reported, or you do nothing. So for example, we have seen in the last slide, there are three key conditions for recognizing a provision. So you should have a present obligation, which that obligation could be either legal or constructive, arising from a past event. In the example which I gave, if you have sold the car along with the regular warranty, then sale of the car itself is the triggering event. It is an event which creates an obligation that tomorrow, if there is a warranty obligation, you need to really take care of that. So there has to be a present obligation, and because of which, if there is a probable outflow of resources, again, as I said, more likely than not is the threshold. And for such obligation, if you are able to reliably estimate how much the resource you will be likely to have an outflow, if all these three conditions, when they are met, you are required to make provision under the current requirements of IAS 37 and Ind AS 37. Now, of course, if these conditions are not met, that means if these three are yes, 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 then you make provision. But if in other cases, when these yes, yes, yes is not met, then depending upon which is listed in the flowchart, either you will disclose contingent liability or do nothing, not even disclose the contingent liability. I'm sure most of the members would be aware of even this is very basic requirement of Ind AS 37 and your IAS 37. But what is changing? If you see, the proposed amendment, inter alia, will provide new guidance with respect to this requirement. That means the amendment focuses on these three aspects, and more specifically, even this one only. These two are relatively not impacted by the proposed amendment. Rather, of the three, the proposed amendment is based primarily focusing on this aspect. That what is the point in time you would say that the present obligation is there, right? So we will deep dive into the requirements of the amendment, okay, in our subsequent video. But let us see what are the key areas which the amendment to the proposed amendment to IAS 37 seeks to address. So there are three broad areas. Mainly which I sought to be amended by the targeted improvements which has been for which the exposure draft has been initiated. These areas are listed on your slide. So the first key area is, how do you determine if the present obligation exists? Now, in the last couple of slides we saw, present obligation is one of those conditions currently under the standard to say what is the point in time. So present obligation should exist arising from legal or the constructive obligation. Now, the proposed amendment actually gives amendments and clarity on how do you determine if a present obligation exists and what is the point in time when you should recognize provision. This is the core of the areas which the proposed amendment to IAS 37 seeks to address. So you get more clarity and guidances on these aspects. Also, the proposed amendment seeks to give more clarity and insights on which costs need to be included in measuring the provision. Now, if you look at the first slide which we talked about, this was the problem statement which the standard setters have, the preparers of financial statements, they have asked for it. The stakeholders asked, this is my problem. Which cost I need to include? So there are more guidances, more insights which are covered in the proposed amendment to IAS 37 that gives you additional insights. Which type of cost should be included when you are measuring provision? The third category of the additional guidance which is sought to be given under the amended literature is which discount rate is to be used. Again, this is the problem statement which the stakeholders have asked for, that if I have the long-term provision, which discount rate I should be using? Should I use the risk-free rate? Should I use the risk-adjusted rate? Which discount rate I should be using? So the proposed targeted amendment to IAS 37 seeks to address these questions which were raised by the stakeholders. So you will get more clarity, more insights how to deal with that. Apart from that, IASB's the proposals also gives it proposes the amendment to the guidance on the implementation of IAS 37, or rather IAS 37 from a IFRS perspective. Of course, similar piece will also get replicated in the India's world as well. So the IASB proposal is sought to amend the guidance on how do you implement so the implementation guidance is getting updated in the amended literature. And then new disclosure requirement. So for example, if which discount rates you are using, there will be a new disclosure requirement with respect to the discount rate which is being used by an entity in measuring the provision. And also consequential amendment to other IFRS standard is something which is also proposed because of the amendments which are contemplated for IAS 37. Now, having understood the background in terms of what is the genesis, what required the standard setters to amend the guidance or enlarge the guidance given under IAS 37, or rather in this case IAS 37, IAS 7 is from an India's perspective, what guidances are to be included, and also as I indicated that the IFRIC is going to be replaced and will be included as part of the amended IAS 37. Therefore, specific guidances are also contemplated under the proposed amendment to IAS 37 that will deal with those threshold-based obligations like levies. That is all is proposed in the amendment. Now, of course, because this is just a start of the video series, I just wanted to introduce you to this concept. Each of these areas is something which will be detailing out in our subsequent video one by one. There is a whole lot to cover in terms of what these are sought to be dealt with by the ISB under the proposed amendment. So therefore, the series will continue and we will look at each of these concepts and with more granular details in terms of how and what additional guidances are given and how the standard setter will get benefited. We will also look at, as part of our future series of the videos on this subject, in terms of what additional guidances would be there for the levies and what impact possibly this will create on the various entities. That is something which we will be covering. This is what I wanted to cover for this particular video to set a context of what are the proposed amendments which are contemplated in IAS 37 as a targeted improvement to the existing literature. So this is what I wanted to cover. I mean, please feel free to connect with me. This is the link of the YouTube channel. And there are a lot of videos on various matters which are already listed. I have given the QR code. You can leverage and perhaps get benefited by all of these videos. So I'll take a pause and we will continue this series as I mentioned. And I'll see you in the next video. And bye for now. Thank you.